Hello, fellow traders. 'Tis I, the Rumpled One. It is May 1st, May Day, year 2018. Let's talk trading. Yesterday, I talked about your last trade. Let's talk about this trade, the trade you're in, the trade you're about to get in. This trade is here and now. Forget about the past and focus on what's in front of you. We're starting the month off fresh. So, when you're in a trade, you have to decide what you want. You have to decide which way you want to go, what size of trade you want to put on, where you want to put your stop loss, and where you might want to think about taking profit in the future. And while you do that, after you do that, you make those decisions, you have to decide what is true. And basically, in trading, there's pretty much only one thing to decide. And actually, it's not really a decision so much as it's just paying attention, and that is the trade going in my direction or is it going against me? So really, once you get in a trade, what you're constantly asking and answering is a simple question. Should I exit? Should I exit? Should I exit? Because that's what trading is all about. Entering, waiting, and exiting. So the reality and what you have to deal with is, should you exit the trade? Now, if you're sitting on a big profit, it kind of makes it easy. But if you're in that wishy-washy when you first get in the trade, when you maybe have a small loss about halfway to your stop loss and you want to click exit to minimize the loss, that's what we're talking about. And part of that is the money and risk management. If you say you're willing to lose so much on a trade, then why not let that trade play out? I mean, you might think, well, I'm willing to lose 20 pips and I'm down 7. And it's just kind of sitting there, oh, maybe I should just scratch this trade. That's one way of doing it. But then maybe Harry hindsight will get you when you see, yeah, it dropped down a few more pips, then it turned around and raced and hit your TP. That's that old Harry hindsight in action. Then you kick yourself. Then the next time you do it, it winds up hitting your stop loss and you go, oh, I knew I should have. And then you just drive yourself nuts. So let me hopefully save you some grief. You put these levels on and you be comfortable with those levels, or you find a different level so you're not tempted to second guess your decisions. So let's go ahead and look here. Did you decide to go long at that last week's high there on the yen? Remember, price just doesn't like staying in those wick zones. And in fact, let's look at the month here. Oh, wow, there was a monthly break too. Maybe we can look at a few others. Let's see. The main pairs, the old pound dollar here. We still have some gaps to fill, as you can see. Pound dollar on the month. Look at that. It's definitely heading down so far. Actual, and we right here we're looking at the weekly close to open, but you can see so far for the month it's heading down, and we've got, at least I believe it's heading down for the month. Yeah, we're looking at a monthly chart. Okay, let's look at the euro. Euro's heading down on the month being today. Nice break to the downside. Okay, let's look at the, I think we already looked at, let's look at dollar Canadian. You can see here we're in the body. let's check out the dollar Swiss franc. It popped right through that monthly high. So you can see here, starting off the month, if you can get a monthly breakout, it's pretty sweet. Okay, so let's put this back to the week. And let us move forward and look at the daily chart. Once again, a simple break of the previous days or sessions high. Harry hindsight, yep, you're 26 pips up. And looking at the buy zone, kind of a no-brainer here. Well, you got, okay, right here, you triggered in and you hit your stop either here or here, but you got the reverse and more than make up. As you see here, from the open, it broke, filled that pivot. And you can see we had a nice little rat zone exit here, and then price turned around and came right back up into the red rat zone. So red rats, get ready, 55 pip range on the day. And you can see right here, here was the pivot. It just went and then turned around and went up. And looking at the pivots, there's your weekly R1. There's your weekly pivot. You can see we're between the two. Price action, price action, price action. Three ball, red at the line. What? What did you say, Harry? Yep, profit. I forget who put that Harry hindsight. I just love that, though. I'm having more fun with that. You see, that's part of life. When people throw stuff at you, you take it, you embrace it, and you turn it around. So rather than being insulted and ticked off about it, no, embrace it. It only drives them crazy when you do things like that. And the 5 lines, once again, winner, winner, chicken dinner. It's really not that difficult. Let's see. We were looking at the pound. I mean, there you go. We looked at the euro. I mean, you can see close to open. We've had some nice moves off of the open. Nice moves. And the weekly close to open. The monthly. Look at the monthly close to open here on the first day of the month. Boy, the red rats are really, really getting fat. Let me look at one of my favorite, the euro yen. 55 3 pips off the weekly open, 36 off the monthly. Put it back to dollar yen, moving forward across the charts. Wick zone, no brainer. For those of you just tuning in, price doesn't like staying in the wick zone. The wick zone being between the level between the high and the top of the previous session candle and the bottom of the previous session candle and the low. So these zones that are formed, they change when you go from session to session, meaning if you're a daily or weekly, monthly, or you can even look on the hourly, but price just usually doesn't like staying in the wick zone. I mean, here's an exception right here. It's in the wick of the previous candle, but what happened next? Out. Came down in this wick, out, and busted through that wick. So you can play wick zones, all the way down to the lowest time frames if you like. With the highest open, lowest open, also known as the holo. You see here we put in a nice high open at 0.74, and we had a nice short to the downside You see here it's trying to reach back, and we can look for something that signals a little downside there. And I've only just put the tick chart on time and sales, not really much to see there. And then line chart, once again, use this to clue in and time your buying and selling entries using the spreads dot indicator, the new one I wrote and shipped out this week. Hopefully it's helping you time your trades. And also the inventory reduction bars here. You can see there was a nice short trigger there. We had a long trigger and had another long trigger here, H1 M15, and we've got an H4 trigger up at the top. Now on these, I'm just using these to find trade opportunities, not looking to make big wins, just consistent, 3, 5 or more pip trades, just stacking, racking and stacking the chips, the pips and the chips. And just a reminder, let's see, we've got the dashboard that I added this in, so those who donated in 2018 are getting the 2017 dashboard with the added features. And that's the old spread dots. I guess I need to put the new spread dots on here. So when the lights are lit up, that means you've got an opportunity there for the time frame H1. Okay, so there's an opportunity. There's another opportunity here. So that's how that works. Now, let's see. So this trade, once again, this is the trade that you need to be focusing on, not the last trade, not the next one. And what you want to do is you really have to understand the reality of what's going on right here, right now. And sometimes reality isn't what you want it to be, but it just is what it is. So you have to use that. Use reality, face the facts, and profit. That being said, fellow traders, just remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.